All right, well, welcome. Excited to have everyone here. My name is Matt Nicosia. I'm the CEO and Chairman of Vivakor. We're going to talk a little bit today about the circular carbon economy and the stuff that we do at Vivakor. Quick little snapshot of the company. It is NASDAQ traded. Pricing is around $2 a share currently. Market cap's around $30 million. We did an IPO or re-IPO with EF Hutton about 6 weeks ago. Average volume is around 160,000 shares a day. About 40% is insider owned. A couple key differentiations from us. We have a proprietary patents around our technology, strong relationships with customers and regulatory agencies. We currently have 3 remediation processing centers, RPCs, we call them these RPCs, that are in the process of being put in operation, and we have a huge pipeline coming up to where we can deploy these systems, which we believe will help continue to expand Vivakor's opportunities for the future. A little bit about myself. I've been the CEO and Chairman of Vivakor since 2011. Previous to that, I was involved in a dermatology company which we sold, and I've been on the board of a couple of small public companies and some private companies as well as some nonprofit organizations. My objective, my goal has always been to take an idea from conception to reality, and in that process to commercialization. Our Chief Financial Officer is Mr. Tyler Nelson. Tyler is a CPA. He has an MBA. He has a master's degree in accounting from the University of Illinois, and his previous to Vivakor, he was involved in the audit team at Deloitte. Our Chief Scientific Officer is Dr. Daniel Hashem. Daniel has a PhD from Rice University in petrochemical refining and nanomaterials. His job is to make sure we maximize the value of the end products once we've extracted them with our technologies. So Vivakor is a socially responsible operator, acquirer, and developer of clean energy technologies and environmental solutions primarily focused on soil remediation. In simple terms, we take oil out of soil where it's contaminated and make both usable. We specialize in how we maximize the value of these hydrocarbons, and currently we're doing 2 types of end products. One is an asphalt cement for roads, and the second happens to be a recycled fuel when we're taking this waste material and extracting it. These systems are patented, as I said before, and we call them remediation processing centers. This is a picture of one of our current systems actually in the state of Utah. Now there are a couple of different areas in which we apply these technologies, where we put them on assets or put them on areas that we can then clean. Utah, for example, we're currently on a property that has 760 acres of material. It's around 100 million tons of contaminated soil to clean. It's around 10% oil by weight. So in this process, we clean the oil, separate it, make both usable. And these remediation processing centers, a couple of key pieces about them, they clean 20 tons an hour. They're mobile, so we can stack as many as we need to in a project. For example, in Kuwait, they asked us to do 40 tons an hour, so we're putting 2 of them together. And the extraction value depends on the percentage of oil per ton. We believe the technology is superior to other technologies, mainly for one reason: we do not destroy the oil nor the soil. That's a key piece. Most other competitors will either do from bioremediation, will eat up the oil product, hydrocarbon product, and they still have a sludge, by the way, left over. We actually were processing those in Kuwait. Or you have a thermal process where you stick the sand or the soil contamination through, and the thermal heats it up, vaporizes it, and turns the soil to what's called a carbon black. Well, most of the large UN and environmental cleanup projects are requiring the soil to be usable and the organic material not to be destroyed. That is one of our big competitive advantages. Now, once we've extracted out the oil, we have other technologies that we're continuing to invest in and develop that help us maximize that value, whether it be the cavitation device that takes a lower API material, allows us to double the API, so your heavy wax materials, it cuts the polymers, allows us to increase the API, increase the value. We also developed by Dr. Daniel Hashem is a carbon nanotube sponge. Now this carbon nanotube sponge with very low energy microwaves can heat up to as much as 2,000 degrees Fahrenheit with very little energy. If you add a little bit of hydrogen to it, a little bit of nitrogen. Now you create a cracking environment. Now our objective is not to crack, refine, but to do upgrading. But we seek for opportunities where technology can enhance the value of the natural resource. And also we've also, as a company, extending into other pieces, into water cleaning. For example, produced water. We've got a system that allows us to clean produced water. It does not take out all the total dissolved solids, but it does, depending on the original source of the material, does clean them up and allows us to use the end product, which happens to be a nice heavy material, which is an oil-based product. And one of the exciting pieces where we're extending into is when we first focused on how to best use this end material. Keep in mind our objective is how do we make an environmentally clean process, how do we improve the environment. We also came across a technology which we licensed and we've invested in and we're pushing is a piezoelectric ceramic material that once we embed in the asphalt that we've created, this, when a car drives over the top of it, it vibrates, creating power, which we can then power sensors. And these sensors, we're actually in a partnership with Rowan University, where they're doing research for us to tell us how far apart these have to go. A lot of great exciting pieces, but that kind of gives the idea of the waste of today helping eventually create the smart infrastructure of the future. Because we sell an asphalt product, how can we extend that value? Now, the self-powered road sensors is a very exciting piece. So we have a relationship with TBT Group out of New Jersey. We currently, we publicly announced this, we're doing some testing on some sensors that collect the temperature, the wear of the road, traffic of the road, and the ability to communicate with other cars, other types of automated vehicles. That's going to be something very important for the future, because if you want the smart automated self-driving cars of the future, or all automobiles, including trucks, you better have a smart infrastructure. So we joke that until you have a smart infrastructure, smart roads, you still have stupid cars. And if you've ever driven the self-driving cars, except for on freeways, and even on freeways there's issues, you find you're always having to do some self-correction unless you're in San Francisco. Now we have strong relationships with suppliers. Now keep in mind what we focus on is how do we go after sand or dirt that's been spilt, we clean it, make both usable. We're very close with the Kuwaiti oil company. I was actually there last week, first time since COVID. They finally opened up. We were there right before COVID. We're also close with the State Institution Trust Lands Administration out of Utah. They own 95% of all the oil sands deposits in the state of Utah, so we're very close with them. And how this is going to expand and how these systems, these mobile remediation processing centers are going to expand are through continuing to place them in areas such as Utah, such as Kuwait, and other areas that we can now expand into. The objective wasn't to focus outside of these assets, but we found that tank bottom sludge, drill cuttings, other types of even brownfield projects that are old refinery wastes, all of that, if it has a soil component, we can separate the soil from the oil and make both usable. So there's a lot of expansion happening from the company standpoint. In fact, those are some of our more profitable projects, because not only do we get paid to clean, we actually get to keep the end product. So we see a lot of expansion both within our current product lines as we extend into other countries, Qatar, Oman, Abu Dhabi, Saudi. Those are just the countries we've already have close relationships with. Even in this conference, a gentleman from Ecuador said, my friend is the head of all the EPA in Ecuador. I want him to get involved. Most countries around the world have a problem with this waste material, and this is a solution to clean that up. Some have asked how we financed these systems. Keep in mind, we did go NASDAQ not too long ago. We did raise $8 million in the NASDAQ uplist right before we went to Russia announced they're going into Ukraine. So that was a lot of fun, a lot of fun. We have actually benefited from that because the asphalt cement that we sell has gone up 30% since the war in Ukraine. So there's a lot, it's actually increased our projections long term. But we finance these through SPV models. We bring in a royalty type of structure, so we actually have 2 systems that are currently being manufactured. They'll be deployed hopefully this year. And we're continuing to work with project financing around other types of projects where we will long term be able to benefit for some of that cheaper capital from equipment financing to help expand what we're doing. Now, the couple things about these remediation processing centers: they take 6 months to build. They are built at an EMPC firm. They process about 480 to 500 tons a day, up to 700 tons a day, depending on the amount of oil that's in the soil. Previous to the invasion of Ukraine, 5 to 6 million was the actual run model in Utah per machine. Now that's 7.5 million, just because the prices have gone up. We went from selling a $70 per barrel asphalt cement to $125 per barrel asphalt cement product. Strong EBITDAs and gross margins in this remediation side for these, and once again, these are long-term structures. They're not short-term. Utah, we got hundreds of years of work. We signed a 10-year supply agreement with renewable terms afterwards, and we see that most projects we own are not short-term. Now, a couple key pieces. For example, Utah, we do not get paid to clean. We only sell the end product. So right now we're selling asphalt cement, and we sell the soil once it's clean, because when we're done, this soil has less than 0.5% oil by weight. So it's a very dry material. But we also found silica in this soil in Utah as well. So there's some more work on how do we pull this silica out, which will be exciting, an additional add to what we're doing. In Kuwait, we get paid to clean. We have no operational costs. Our partners cover all of that. We get paid a $20 per barrel price, plus we participate in the sales of the asphalt cement, which they sell to the asphalt suppliers there in Kuwait. So we're projecting around $40 to $45 per ton that we clean will be the revenue per system in Kuwait. That's about $6.5 million in top line revenue per system. We're putting 2 systems there this year. Pretty exciting project. Now, the really exciting ones are the ones where we take over and we replace, I would call them the hydrocarbon landfills. Areas like Houston with lots of oil production, lots of oil storage and refining. Especially if there's storage, they have tank bottom sludge. We had a meeting with one of the larger tank farm companies, and they told us they throw away on an annual basis 436,000 tons a year of tank bottom sludge. They pay $20 to get rid of it, and that's a minimum 40% oil by weight. So for us, keep in mind, in Utah, we're cleaning material that's got 10%, and we're getting a half a barrel. When we clean this stuff in Houston, it's 40%. We're getting 2 barrels of product. Half happens to be an asphalt. The other half happens to be your light fractions materials you can separate off. So those are very exciting projects where we're replacing the landfill need in areas where there's a lot of waste. So we have a long-term supply agreement in the state of Utah. Current property is owned by a private property, one of the few ones. The rest are actually owned by the state. We've locked up 2,000 tons of material for the next 10 years. So if one machine can clean 500 tons a day, now I have supply for 3 more systems to do 2,000 tons a day. And if I'm processing 2,000 tons a day at 10% oil by weight, we're getting about 1,000 barrels a day of end product in that project long term. Keep in mind, this will be asphalt cement, as well as you're going to have on top of that, you're going to have some sand. Pretty exciting opportunity in that one. This is a picture of the actual machine that's there operating currently in the state of Utah. Asphalt cement continues to increase in price. The current price of asphalt cement, based on Argus pricing, is about $650 per ton. Now each ton has about 5 barrels in it. It kind of gives you the idea some of the range. Keep in mind, that's a wholesale price. Retail's another 20% on top of that. This is our Middle East project. We started in the Middle East about 4 years ago. Previous to COVID, we were operating, actually this is the day when they shut down COVID. I was actually there on site. We took a oil product from the Iraqi invasion. It was 20% oil by weight. We knocked it down to 0.2. And just so everyone knows, they've got $3 billion left of their settlement with Iraq to clean up Kuwait, and they have 37 million tons of material in 2 piles. We're the only company, and I was there last week, we're the only company to be able to, in the country of Kuwait, to extract a sludge material that's more than 7% oil by weight to basically less than 0.5%. We did it 20, 30, 40. So there's a lot of opportunity there. We did announce a long-term contract with Kuwait. 500,000 tons expanded to 1.5 million. my meetings last week, we expect a lot more expansion off of that as well. Margins, the margins continue to get better, obviously, as we participate in economies of scale. The ability to, once we have a client, provide more services for them. But one of the most important things long term, because we do a lower carbon process to make this material, we are doing what's called a carbon life cycle analysis to prove or to show what the actual carbon difference is. We believe we'll have available to us green bonds, 2 and 3% financing. We've actually talked to quite a few ESG funds that are very excited to participate in the equipment financing of these projects because it fits a lot of initiatives around cleaning up the environment. So we're pretty excited about those things. Just a couple of key metrics, and obviously we just came out with our K last Friday. But last year, and this was obviously up to at the time of uplist, last year we were affected heavily because of COVID. We would have seen $10 million in top line revenue last year from Kuwait, but that didn't happen. Last year we had $1 million in revenue. And we expect this year, though, we expect around $4 million estimated to come out of Utah, another $4 million to come out of Houston, and about $2 million to come out of Kuwait. But with the projects that we have, both the demand for the Utah product and Kuwait, next year we're looking at about $60 million is estimated top line revenue for next year. The sales cycle takes a long time, about a year and a half sales cycle, but once you're in, there's long-term contracts and they continue to expand. We have quite a few advisors to the company. One is Dr. Khalid bin Jabr Al Thani, part of the royal family of Qatar. His wife is royal family of Saudi Arabia. He's the one that actually got me into Kuwait, got me into Qatar, got me into Saudi. He's also an investor in the company. We have Mr. Ron Xavier. Ron was health and safety at Shell Oil, was actually involved in a life-saving event. He heads up our ESG initiatives, reports directly to management. And then we have Mr. Garen Korajan, heads up the Middle East as well. 16-year executive, Deloitte & Touche consulting firm in Deloitte Consulting in the Middle East. Our board of directors is a strong board of directors for what we consider to be a newly NASDAQ company. Mr. Al Farrar is actually here today. Welcome, Al. Al was head of BDO's, we call his entire audit business out of New York City, sits on other multiple listed companies. Joseph Spence, who's former investment banker at Goldman Sachs, retired, NASA engineer, done a lot of focus recently on smart roads. He actually done a lot of stuff with the NEOM project in Saudi. Matt Bulk. Matt Bulk's a former investment banker out of New York, has taken a couple different companies, NASDAQ. Trent Staggs, who's also on our board, a politician in the state of Utah, former JP Morgan executive, and then obviously rounds it out by myself. So the company continues to expand. Our objective now is how can we place as many of these remediation processing centers as possible. Each of them, it's really simple to calculate. We clean 20 tons an hour. When you clean 20 tons an hour, we know what the oil content is. They run 300 days a year. They have a 20-year useful life. They cost $6.25 million to build. And from what we're seeing is over the next 4 years, we see a pent-up demand for at least about 100 of these systems to be placed just in projects that we're already involved in. So pretty excited. Been fun on NASDAQ post the wonderful experience with Ukraine, and we did see a lot of retail effect from that, being we came out at a 60 million market cap. Now it's around 30. We lost most of the retail clientele, is what they told us right out the gate, because the very first day trading was the first day that Russia was in Ukraine. But if you have a chance to look at the financials and structure, we currently have a shareholder equity higher than our market cap, and the company continues to grow, and we see a lot of exciting things in the area to clean both the soil, air, and water. So thank you, ladies and gentlemen. Love to answer any questions anyone has, and thank you for being with us today. Please.
So it sounds like the expansion is going to be coming from existing projects. Am I reading that right, or do you have a lot of other new potential projects?
Great question. The question of is expansion of the company, where is it going to come from? It sounds like it's going to come from existing projects and the potential new ones. Actually, that's a two-part question of yes, on both sides. Utah, just the relationships we have in Utah, we have one system there. That system will do about 7.5 million on an annual basis in oil sales, about another 2 million in sand sales. the demand from buyers, keep in mind this is a certified asphalt product now, the demand from one buyer is for 4 times what we can produce. So that's being structured and financed through some equipment financing. So that project will go 4 times, and there's a lot more available just in Utah. Back to your point, yes, there's a lot of expansion currently in Utah. Kuwait, already in place, 2 systems to deploy this year. Conversations I had last week, there's enough for there's demand for another 10 of these systems in Kuwait. And then Houston already developed. Yes, Houston, we have a system already going there. But what I'm finding is those projects are your near term. Within the next 2 years, we feel we can effectively, I wouldn't say maximize, but penetrate those well. And there's a long list of projects that take about a year development cycle to get into. And those will happen on years 3, 4, and 5. And those are tenfold of what we're seeing coming from just existing projects. Please. No, that's okay. Yes.
Is there a sensitivity we should think about oil prices or asphalt prices at some point that doesn't make sense?
Excellent question. Please.
Is the Utah contract open for you to do as much as you want, or are you required to do certain things?
Excellent question. So 2-part question. One is about Utah itself, where we've got the contract in Utah. What's the structure on that? I'm sorry, the first part again. Oil price sensitivity, yes, thank you. Absolutely. This project in Utah costs us $25 to make a barrel of material. So so when oil's 35, yes, this becomes, from an oil perspective. But Utah, which is the neat thing behind it, the sand, right now we're selling, the sand can be sold as a frac sand on a wholesale basis at $30 a ton. Now, if we get the silica, this project will make more money off selling the silica than the oil and the sand combined. So that's kind of a hedge from that aspect. But from an oil sensitivity standpoint, from internally, $40 a barrel is where we've said that's our bottom. And now, the size of Utah project, the contract currently for Utah is everything, they'll take anything we can make, up to 50,000 tons a year of asphalt cement. It's a take-or-pay structure. So that's, and then after on top of that, there's multiple other clients which we're working with that'll take it. This group, they would love to take everything we produce. They said just one of their clients, because they're a marketing firm, one of their clients will take 50,000 tons a year, and so that structure's in place, but there's a lot more on top of that. We see a lot of expansion around that from an asphalt side, specifically Intermountain West. This becomes the only source in the Intermountain West. You either buy it from California, Houston, or you buy it from Montana, and they just had a fire in the Montana refinery last week. So there's going to be a shortage this year. This becomes a local source for the entire Intermountain West and the only one. Drop below 40. Well, according to our royalty contracts, we're not required to produce, correct. Yes, so the contractual structure we put in place with the SPVs, once it hits $40, we have the right to say, hey, we're not going to operate at a loss. Now, I think with the silica, that's going to change this whole project around in Utah. But no. Houston, Kuwait, we have a fee we get paid, so that offsets all operational costs. What makes it work, but those are different. But Utah, that sensitivity is at $40 a barrel. Please, please. Hey, why not? Let's go.
You've described it all very long-term projects. Is there any applications for short-term things, stuff like that?
Thank you. Actually, last year when the California had their spill, and they spilt out on the beach, I was contacted by quite a few friends. Matt, can you get a system here? Well, my mobile system's in Kuwait, and I can't get it here yet. But I do see systems that we can actually put on 18-wheelers that has the full capability, not to do 20 tons an hour, but maybe one that'll do 5 tons an hour, that'll clean the material and be mobile in those areas. Now keep in mind, because technology-wise, we extract soil out of oil, not oil out of soil, there's a big difference. If it's a higher percentage oil, I can process more tonnage. If it's a lower percentage oil, so we've run these Our minimum is, back to another sensitivity, our minimum is 7% oil by weight. We won't process it if it's less than 7% oil by weight, because at that point, I can't clean 20 tons an hour. When it becomes 2, 3, 4%, it drags that out. So all of our projects, we want a minimum of 7% oil by weight to keep up with that 20 tons an hour. But if it's 40 and 50% oil by weight, we're almost doubling that capacity, because it's extraction of the soil, not the oil, which determines the throughput. Questions to everyone? Thank you, guys. Appreciate you coming out today, and looking forward to maybe coming back next year. Exciting. Thank you.